Hello investors, welcome back to the Graham Strategy channel, where we follow a portfolio of stocks chosen based on the Graham 7 criteria for the defensive stock investor. I remind you, as always, that I'm not a financial advisor and I do not make any recommendations on what you should or should not buy or sell. A little more than a month has passed since the rebalancing, where I sold the company Boliden and added Betsson to the portfolio, while 4 of the old stocks remain. We will take a look and see how the portfolio has performed since the rebalancing, as well as since the portfolio was started. The markets are still very volatile due to the massive inflation, expected interest rates hikes, as well as the war in Ukraine. The inflation rate in March reached a remarkable level of 8.4% in the United States. And when looking at historical trailing PE numbers, this would indicate that an average PE ratio of less than 10 can possibly be expected in the months to come. With the current PE average of the Standard & Poor's 500 of 16, it would imply one of two things. One, that the company profits will grow by 60%, or two, that the stock market will fall by about 40% from the current levels. Which is more likely? Well, the past is not a reliable predictor of the future, and there are many other factors that need to be taken into consideration, but there is definitely a high probability of a continued bear market. Looking at the period since the rebalancing of the portfolio, the performance has been slightly worse than the OMX30 index. The index has gained 5.41%, while the Graham portfolio has gained only 2.90%. And this includes a fair amount of dividends. So far, more than 10,000 Swedish crowns were paid out in dividends, and comparing this with the OMX30 index including dividends, we can see that this index has gained 7.12%. And thus it is clear that the Graham portfolio has not done very well the past month. So why are the top 5 Graham stocks performing worse than the index? Well, the main reason is probably that 3 of the companies are into property management, which due to the coming interest rate hikes are perceived less favorably by the market. However, if they are able to maintain good profits despite this, there's a good chance that they will trade at a higher value in the future. And looking at the period since the start of the year, the Graham portfolio outperforms the index. And looking at the period since the start of the portfolio last year, the Graham portfolio has performed much better than the index. So that was a short update on the portfolio, and I hope you enjoyed it. So stay tuned for updates, subscribe and hit the notification bell to receive a notification when I release a new video. So until next time, as always, stay sharp and follow your passion.